Let's talk about contacting your tax professional or your client's tax professional before year end, prior to year end. Okay, so you're doing a good job. You're keeping either your books as a real estate investor or your real estate investing clients' books up to date, weekly, monthly, whatever your rhythm is throughout the year. And so you get to year end and reconcile everything, do all your quality control checks. Any adjusting journal entries that you can proactively do is definitely encouraged. That you're supposed to do and are 100% accurate, right, without having to consult with the tax professional. So you do all that stuff, and then you should essentially just be able to hand over statements, right? So we're talking entity-specific statements, property-specific statements, overall statements for the entire business or businesses to the tax professional. Okay, but they may need additional things from you. Okay, so it kind of depends, who you're working with and what they like to see. But most tax professionals have just a standard kind of checklist that they go through and a document list that they're looking to obtain either from you as a real estate investor or from your real estate investor client. Okay, and so what we normally see from our end, so I'll speak to this as a real estate investor, but also as the owner of Time Capital Bookkeeping, who serves a lot of real estate investors. Okay, and so from Time Capital's perspective, it's really just giving our clients' tax professionals property-specific statements, entity-specific statements, right? And so we're talking balance sheet, income statement. They never ask for the statement of cash flows. We just use that as like an advising tool with our clients. So they never really ask for that. So it's really just balance sheets, per property, per entity, income statements per property, per entity. And let's see, what else do they ask for? General ledgers, trial balances, and then they may ask for very specific like custom reports, which you can pull pretty much any report you could ever think of. You can pull it from QuickBooks, which is why we like QuickBooks so much for what we do, right? So speaking from the so that's pretty much it from a bookkeeper's perspective, like entity specific reports, property specific reports, balance sheet, income statement, journal ledger, trial balance, and they may ask for a few other reports, but that's pretty much it. From a real estate investor's perspective, they're probably going to ask for, in addition to that, they're probably going to ask for HUD statements. Okay, so go ahead and be, gathering those things up, leading up to year end. Okay, I'd probably start in October, honestly, to give yourself enough time, especially if you're a high volume real estate investor, whether you flip or you buy rentals or whatever the case is. Go ahead and collect all of those HUD statements. If you're doing your own books, you should already have all that stuff in place. Or if you have a bookkeeper who's doing your books, you should already have all that stuff in place, right? Your bookkeeper should have all that stuff. So now whatever documentation we have, we will give the tax professional access to it. So HUD statements folder, if they even want to dig into like loan statements and things like that, we have those folders. Everything's super duper organized. So we can just give the tax professional like temporary access to that stuff, however long they need, and then we can kick them out kind of after, once they're done, until the next year, just so they're not kind of lingering in our clients' folders, right? And so definitely they will need HUD statements. They will need, I'm not going to go into all the like personal documents they will need, right? We're really just talking about with the business, but all the transactional documents essentially that you have experienced over the course of the year, they may ask to see those, right? Just to verify some things. But from the bookkeeper's perspective, it's pretty easy going. Just those few statements and you're good to go. Where the extra work may come in is if they catch a mistake or, they probably will have a lot of questions, especially with the way that we keep up with properties using the customer feature. And then sometimes we keep up with multiple entities within one QuickBooks account if they're subsidiary non-filing entities. And so, we use the business feature for that. So they may have some questions about that. They may have, there are some nuances within QuickBooks, sometimes on property specific statements and entity specific statements, all within the same QuickBooks. It'll show really weird values for bank accounts and credit card accounts when you pull property specific and entity specific statements. But the overall QuickBooks account, the bank accounts and the credit card accounts are obviously reconciled. But some of those custom reports. It'll show odd values for those just because of how QuickBooks accounts for things. And so you have to explain things like that, right? So just be prepared for that. But you definitely want to contact your tax professional. Or your client's tax professional, probably October, November timeframe, just to, if they have a super clean, document list or a checklist that they can send your way so that you know what to expect and you can go ahead and start gathering things, or maybe you already have everything and now you have their list of expectations. And so you can have that ready to go. So as soon as January hits of the next year, you're doing all your reconciling and you're, finishing up journal entries and doing your quality control process and all that stuff. And then you have, say it takes you a week or two to do all of that for the entire year. And then you already have your document list and everything ready to go. And so, you can get, either your bookkeeping records or your client's bookkeeping records to the tax professional for the previous year, that possibly within the first couple of weeks of January, right? We usually shoot for the end of January. So we want to have all clients, statements and information and everything to their tax professional by the end of January. And so that gives them plenty of time to file. They usually file early, right? Or they'll come back and, maybe they strategize with the real estate investor, depending on what their tax strategy is. And maybe we need to, categorize things in a different way or something like that, right? Before they file, depending on, obviously within the bounds of the tax code, depending on what their tax strategy is. So, but that's usually our goal. We usually get things in earlier than that, but our no later than is typically is the end of January. So that gives plenty of time for further strategy and those sorts of things. And our clients, good tax professionals, they will ask for statements prior to year end so that, maybe January to October or January to November, whatever months are 100% complete. And they'll do a projection for the last month or two of the year based on the previous months. And they'll go ahead and start, strategizing with the real estate investor. So that's preferable, right? You should honestly be talking with your tax professional probably quarterly, depending on how much volume you do. But just having little tax strategy sessions once a quarter is definitely recommended. But hopefully you have an idea. I mean, get with your tax professional or your client's tax professional October, November timeframe at a minimum. Go ahead and start prepping for year end so that you can get everything to them that they need and you guys are on the same page about things. And it's very smooth and easy. Tax season does not have to be a nightmare. It can be very smooth. Where things get a little stressful is if we get a 12 or 24 month cleanup in January and then we're trying to rush, right? But for your existing clients, it should not be a stressful thing. It should be a satisfying thing. Hopefully this was helpful. On to the next video.